Today, crypto prices react to sky-high inflation. And the co-founder of Terraform Labs explains why the firm is buying billions in Bitcoin. Welcome to CNBC's Crypto World. I'm Kate Rooney. Digital currencies faced wild swings this morning, and despite the market as a whole dropping by 2.5% by noon Eastern, much of the crypto market is mixed. Bitcoin hovered around the $40,000 level. Ether, meanwhile, looked to recover from yesterday's losses, and Terra's Luna slipped further from last week's record high. Let's talk about the top stories affecting prices. First, cryptocurrencies are reacting to red-hot inflation. The latest consumer price index data, which measures the price change for a wide-ranging basket of goods and services, jumped 8.5% in March. That's the highest it's been in more than 40 years. Bitcoin moved higher after the data's release, much like the U.S. stock market. Defiance ETF's CIO, Sylvia Jablonski, is staying bullish on Bitcoin despite the crypto's recent slide. Here's what she told Squawk Box this morning.
I'm a huge fan of crypto. I think that, if you asked me this question a couple of years ago, I would have thought, like many others, perhaps it'll be an inflation hedge. So that's proving not to be true. I think what crypto is looking like is another risk asset, NASDAQ 100 type of stock. I just think crypto is going to soar. And again, volatile, sideways, super risky, know what you're getting into. But I think that this is something that I plan to hold for a very long time. And I expect to see in that $100,000 range when you're talking about Bitcoin in years to come.
Next, Robinhood is expanding its crypto offerings. The platform added Shiba Inu, Solana, Polygon, and Compound to Robinhood Crypto. Shiba gained some 7% after the announcement, and the new offerings come just about a week after the platform unveiled its long-awaited crypto wallets. I actually spoke to Robinhood's chief product officer about that news last week at Bitcoin 2022 in Miami. You can find that full interview over at cnbc.com/cryptoworld. Finally, BlackRock and Fidelity are putting money behind USDC issuer Circle. The two Wall Street giants were among the investors leading Circle's latest $400 million funding round. Circle is set to go public through a SPAC deal sometime this year, and in fact, back in February, the stablecoin issuer reworked its deal to double its valuation to $9 billion. Crypto World's Tanea McKeel also has a deeper look into what's moving crypto and some insight into Luna's decline from recent highs.
A lot of investors were keeping a close eye on Terraform Labs. The Luna token reached a record high of about $120 last Tuesday. It's now down about 27%. Luna lost about 1% today alone. The news that drove Luna's gains last week was the billions of dollars in Bitcoin that Terraform bought to pad its reserves for its stablecoin, UST. That's different from the Luna token itself. And the firm isn't finished. Just yesterday, it added another $173 million in Bitcoin to its wallet. That's all part of its CEO's goal of buying up to $10 billion worth of Bitcoin, and we'll be talking to him in just a moment. Bitcoin's recent declines have added pressure to the performance of Luna, though it's notable the continued Bitcoin buying by Terraform Labs hasn't driven Bitcoin's price higher as big purchases previously have. Bitcoin has dropped about 12% in the past week, breaking below $40,000 briefly. It remains tightly correlated to traditional risk assets, which are all facing macroeconomic pressures right now.
And speaking of Terra, I had the chance to chat with Do Kwon. He is the co-founder of Terraform Labs. Take a listen. There's two major cryptocurrencies, Luna and UST. Let's start out with how all of these entities interact. You've got Terraform Labs and Terra. They sound familiar. It can be a little bit confusing. Walk us through it.
Sure. So probably the most important, Terra is an algorithmic decentralized stablecoin. So the idea is that you have a cryptocurrency that retains all the censorship resistance benefits of Bitcoin and Ethereum. It lives entirely on the internet. It can be programmed on. It can't be seized or censored. While at the same time, it maintains price stability against the dollar, which means that Terra USD, which is the USD stablecoin, is always going to retain value at 1-to-1 with the dollar. Luna is the cryptocurrency that helps to stabilize that stablecoin. So the idea is that at any given time, you can trade in $1 worth of Terra USD against the protocol for $1 worth of Luna, and then vice versa. So you can sort of think about Luna as absorbing the price volatility of Terra stablecoins.
One thing I do want to start with UST and the stablecoin, like you talked about. So it's not backed by dollars or commercial paper. That's really the way we think of a lot of the US-based stablecoins working. It's backed in part by Bitcoin. So why use Bitcoin, a relatively volatile cryptocurrency, here as a reserve asset?
I don't think that there's anything wrong per se with backing stablecoins in terms of dollars. It's just that there are some limits of the things that you can do with the use cases of so-called centralized stablecoins. Now, the issue is that if you're keeping $1 in the bank account for every unit of stablecoin that's issued, that stablecoin now has an issuer and an operator. So what that means is that you have all the attendant compliance and custodian risk of having an operator and an issuer. Because, for instance, like what happens if the company for some reason goes bankrupt? Then in that case, everybody that built interesting things on top of that stablecoin is now held hostage to the bankruptcy court that is governing that fate. Or, for instance, given that bank deposits are so easy to regulate, I think one of the things that we'll start to see with centralized stablecoins is that there's going to be massive compliance creep, which means that over time, you're going to start to layer on things like, KYC requirements and, sort of vetting what types of applications can use a stablecoin, which isn't necessarily appropriate for all use cases. Now, a decentralized stablecoin as something that is backed in native cryptocurrency, like let's say Luna or Bitcoin, has the property that there is no issuer. There is no operator because anybody in the world can trade in $1 worth of Bitcoin, can trade in $1 worth of Luna to issue 1 Terra USD. So this has the nice property that it makes decentralized finance truly decentralized.
So Joe, we were in Miami last week for Bitcoin 2022. A lot of Bitcoin enthusiasts there. Have you seen support for Terra and your ecosystem because of your support in buying Bitcoin? What does that look like?
Yeah, so I think buying Bitcoin is one element of it. The second element is that Bitcoin now gets bridged over to the Terra blockchain and then gets used in a suite of applications and decentralized autonomous organizations and so on and so forth. So I think there's large sections of the Bitcoin community that are very excited that Bitcoin gets a credible and large smart contract layer through Terra. There are, of course, other voices of the Bitcoin community that don't like Bitcoin changing, shake fist at sky, and then don't like the fact that there are other cryptocurrencies other than Bitcoin. But it's a large community, and I think there's mixed reactions.
But some policymakers in Washington right now do appear to be looking at stablecoins in particular, and that may be sort of the initial target for tighter regulation. The Wall Street Journal had a piece about that over the weekend. Are you worried that U.S. regulators could clamp down at some point or even try to shut down a project like UST?
Oh, so I absolutely think stablecoins need more regulation. And the reason for this is because if a major stablecoin goes down, what's happening to Bitcoin right now is just going to look like a walk in the park. So we need to make sure that whatever money that we use, to do spot trading. So like stablecoins are 80% of the spot trading for crypto. It's most of the liquidity in all these lending protocols and AMMs. So we need to make sure that whatever stablecoins that we run on has the right representation and people are aware of the risks. I don't think, insofar as you're engaging with, regulators and people that are just trying to make the system safe, that they're going to shut it down. I think it's just going to lead to dialogue to make it safer.
Before we go, Bolt CEO Madhu Karuvala was on CNBC's Tech Check earlier today, breaking down the largest merger in the crypto industry to date. The payments company is buying up crypto startup Wire for $1.5 billion.
Crypto is the future of payments. And with Bolt and Wire, we are going to bring the crypto one click to merchants and give access to a whole new customer segment.
That's all for Crypto World today, but we'll be back again tomorrow. We'll see you then.